Guys, just quickly looking at a question here from a subscriber saying, how do you control the FOMO on days like today? I keep seeing the dollar fall and things like pound dollar climb. And since we're bullish, I keep wanting to jump in, but I'm second guessing with NFP risks ahead. So, I mean, FOMO is something you're always going to experience. I mean, even after doing it for quite some time, FOMO is still something that sometimes it's a lot less frequent these days, but sometimes it still does get the best of me where you're just itching to get into to a move that you see. Especially if it's something that's in line with your outlook, right? So sterling, I can completely understand the frustration if you see sterling move against, or move without you rather, because it is something that we're still bullish on from a fundamental point of view. So if it's moving in the direction that you think it should, you want to get in on that action. You want to be able to trade it from a short-term point of view. Now, there's a couple of things that I personally do to help me with this, or that has helped me with this. The first one is embracing embracing more medium-term positions in your trading. Um, I'm a lot less for example, to your question, pound sterling. I'm a lot less concerned. I've got absolutely no FOMO where I'm sitting right now with pound dollar, because this is something that I'm already long of. Right? We did a video. When was it? I think on the 19th, or was it the 18th, 19th or 18th, saying that we're looking to get into this with the stop, running somewhere below that 85.50, and this is like a core position that we're planning to build in pound to the upside, right? So the nice thing about having medium term exposures like that, it's a small position running, right? It's only one position, and I normally start at a very, very, very small risk percentage. If it's smaller trades like these, incremental risks or incremental positions. So it's not a huge position right now, but I'm enjoying the upside and the move without having the stress of that short term volatility, right? Even if it goes against me, even if it starts to fall drastically towards my entry, I'm not going to stress about it, because this is more of a medium term position. So I find personally that having a stake in something that I like medium term, even if it's a small position running, it helps being, already being in a move when you have a very strong bias for that particular asset. So, for example, equities is something that we've got medium positions running in. I've got positions in S&P, not Nasdaq itself, but the FANG. I'm trading a FANG ETF. Eurostox 50 is another one. Had a lot of positions in FTSE, but a while ago liquidated and rotated that into other indexes like the S&P, because just thought the performance was much better compared to the FTSE. The other one, the more recent one, is China A50. From my side, I can only trade the MSI China ETF. So it's pretty much the A50 or proxy of it, very close to the A50. So the way that I get around having FOMO on days like today, where equities are just ripping to the upside, is already being long it, right? So I'm not like stressed out and having that urge to just jump into the S&P to buy it. I don't have to stress about it, because I know I've got a stake in it already. It's running there. It's in the background. The risk is managed. The risk is mitigated. It's diversified across various indices. In terms of something like sterling, for example, it's diversified across a basket. So the way that I like to get around that is just to make sure that those things that I really have a really, really big conviction in, to always have something running in it. Now, there will be times when you are completely flat on something, when you won't have any medium-term positions running. A good example of that was going into that June FOMC meeting. For us, that was a very good spot, running into key resistance to liquidate the bulk of positions that we had running on in sterling. Just because from a dollar point of view, the risks were starting to add up. You guys can go back to the videos we did at that time. Just before the FOMC on the 16th of June, we were starting to get a little bit edgy about the market, starting to get a little bit unsure, and we just thought, okay, no, things are getting a little bit hairy. We're going to get out, and we traded in and out of sterling, but it was mainly short-term positions. And more recently, when we had that move to the downside, after we saw quite a big move lower in positioning for sterling, I thought that a lot of that froth was out of the markets. And from a timing point of view, it seemed that, okay, now is a good time to start building into more of a core position again. So the way that I get around it, firstly, is making sure that those things that I have a big a conviction on, that I'm running something on it, right? So I'm not missing out if the market goes up on a session like today. It's in line with the fundamental outlook, and that makes me comfortable, right? The other thing that you can do, of course, if you don't have medium positions running and you're forced to trade short term, it is challenging, because obviously you see that thing moving, and you almost, I don't want to say forced to trade, but you feel forced to trade, because the bias is higher. You're kicking yourself. You're like, man, if I got in earlier, I would have been in profit now. But I think that's the wrong type of mindset to have. I'm not saying that's how you're approaching it. I'm saying that if you're looking at it from I should have and I didn't, and now I'm missing out, I think that's a habit that you need to work on, if that is your approach. Because if you're always going to be on the back burner with those types of positions, you're always going to be chasing the market, and you're always going to be left wanting. You're always going to be looking at that could have, would have, should have trades that you could have or would have or should have taken. The best way to approach this, right, is firstly ask yourself whether there was reasons for you not to trade. So, okay, the markets have moved in terms of sterling today quite a lot. The dollar has tanked quite a lot. Was there reasons for you with this dollar move? Was there reasons for you to stay out of the market? Because remember, your hindsight bias, what your hindsight bias does is your hindsight bias looks at this move. The only thing that your hindsight bias tells you is that, man, if I bought earlier, I would have had profit. But what my hindsight bias, conveniently forgets in situations like this. Remember, hindsight is an exact science, right? So what your hindsight bias forgets to remind you of is that, hey, there was actually good reason for me to stay patient in the short term, at least, and that's because of a lot of two-way risk going into NFP. Remember, this isn't just a normal NFP print, that we're going to get. This is going to be a massively important one, and depending on the size of either the beat or the miss we get, it will change the market's expectations for the short to medium term way that the Fed is going to react at that September meeting, whether they're going to move forward with announcing tapering or not. So it is a very, very important one. And going into a meeting like tomorrow, or into an event like tomorrow, you really need to weigh the benefits and the risks of entering things short term. There's absolutely nothing wrong with trading in these conditions, but the challenge with looking at the moves afterwards, the challenge in terms of the habits that can start to create, is now the next time when you've got good reasons to stay out, you force yourself to jump in, because you are already afraid of the potential profits that you're going to miss out on. And what that means is that you force yourself to trade in conditions, in compromised trading conditions. What I mean by compromised trading conditions is that right now there's a lot of two-way risk, which means that, yes, jumping in, you could make a buck, but your odds of having choppy price action, choppy moves, range-bound moves is much higher compared to strong trending moves, because the markets normally in these types of environments, especially in summer liquidity, tend to trade a lot slower, tend to trade a lot more muted. So the odds are more skewed towards range-bound price action than anything. So it can be frustrating on a day like today to see that type of move, but I know it's difficult, but try to coach yourself to remind yourself, if you're staying patient for whatever reason, write that reason down, whether it's incoming NFP, whether it's whatever it is, whatever the reason is that you think there's risk, it's a compromised environment to be trading in, write that reason down. And then whenever you see that move taking place, you just refer back to the reason for you staying out, because then you're going to remind yourself, okay, this is why I stayed out. Because after seeing the move, it's hindsight bias. It's like, man, I should have, I could have, I would have. And if you continually, if you kick yourself in those environments the whole time, you're going to start developing that um, that habit of potentially jumping in no matter what conditions you're seeing, because you're so afraid of missing out once again. Keep in mind that not trading is also trading. And what we mean by that is that your decision to stay out of the markets, i.e., not adding any additional exposures in whatever assets, staying in cash basically, that is also a trading decision, right? That's also a position. Having cash, sitting on cash instead of having something invested, cash is a position in the market. So if you're patient, you're like, man, I'm just not sure. There's absolutely nothing wrong with that. So we can sometimes be under the impression that you need to be day trading every single move that you see every single day, and that's actually not the way that professional traders trade, right? There's core positions running, there's bigger themes that's happening that you're trading in the background, and sure, when you have that short-term opportunity, by all means, you can jump in and trade it, but you really need to um, you know uh, get rid of the idea that every single short-term move that you see, you absolutely need to trade it. That's the quickest way to lose money in trading, in my opinion, because it's developing it's developing habits that's going to be detrimental to your long-term success. So hope that's been helpful. I would like just to repeat, the biggest thing that I would say is that if these types of moves, if it's frustrating, try to have some longer or medium term things running to help out with that. And if that's not possible, maybe due to your account size or whatever reason that you can't do it, then just make sure that you always write down why you stayed patient in the first place, so that your hindsight bias doesn't cause you to second guess yourself, which later on can be detrimental for your long-term success.